Welcome, everyone. Welcome to Bucks Outside the Box. And today, who are we talking about, Brian?
Rich Dad, Poor Dad, Robert Kiyosaki, who recently posted on X that in 2025, credit card debt is at all-time highs, US debt is at an all-time high, unemployment is rising, 401ks are losing, pensions are being stolen, USA may be heading for a, all caps here, greater depression. And he went on to urge investors to buy gold, buy silver, buy Bitcoin. And he said specifically, I strongly believe by 2035 that one Bitcoin will be over $1 million, gold will be at $30,000, and silver
Which blows my mind.
I'm
sorry, but that just blows my mind.
And he went on to say, and silver will be at $3,000 a coin. I don't know what a coin means. I think he means an ounce. And he says it will be the easiest money you ever made. So I do some freelance writing about finance and investing for Go Banking Rates. And I asked a bunch of certified financial planners what their thoughts were on Robert Kiyosaki's prognosis here and his predictions. And the consensus among these CFPs was that Robert Kiyosaki was taking some very real risks and threats in our economy, but taking them to an overly catastrophized place and, shouting that the sky is falling, and then, overstating the get rich quick opportunities with some of his prescriptions for investments. So I'll just run through a couple comments that we collected from some of these financial planners. So the consensus, they were all in agreement that uncontrolled public and private debt is a very real risk in our economy and a huge threat. So, for example, the Federal Reserve pointed out that household debt reached an all-time high in the first quarter of this year at 18.2 trillion. That's a real risk, right? Americans are over-leveraged. And that's, both privately, at home, for personal finances. It's also in private corporations have way too much debt. And then the federal government has too much outstanding debt as well. And the One Big Beautiful Bill Act that has passed the House and is currently being debated in the Senate, that would accelerate that public debt, that government debt even further. So next point, all of these CFPs agreed that uncontrolled deficit spending is a huge structural risk in our economy. So I'm going to quote Rod Skiles here, who I spoke with. He's the writer behind The Unconventional Economist. And he said, the key driver to all of this is U.S. government deficit spending, which leads to a much higher overall U.S. debt. He went on to say, we are currently in the fourth year of the worst treasury market in history. And he's referring to bond auction sales for US treasuries. All right, third point here. All of these CFPs agreed that inflation risk and recession risk are both very high, or put another way, stagflation risk is very high. So in the May issue of the Wolters Kluwer Blue Chip Economic Indicator Survey, which is a survey of economists around the country, they see a 72% probability of inflation increasing what they call meaningfully in the next 6 months. And they see a 47% probability of recession in the next 12 months.
So yes. With all of this information, and everybody seems to be fairly agreeing, what are your thoughts then about gold, silver, and Bitcoin?
Well, so, yes, precious metals they have historically served as a hedge against geopolitical uncertainty, and there is plenty of that right now. One quirky point about where we are today is that stocks are near all-time highs. They're hovering around all-time highs at the moment that we're recording this anyway. But gold is also at an all-time high, and that's unusual. Usually precious metals will, counter the trend of stock markets and serve as a hedge. So, it's not unheard of, but it is unusual. Where I and, every single one of these CFPs that I interviewed, where we all agree is that this notion that investors are going to get rich quick with cryptocurrency, with gold, with silver, that Kiyosaki is explicitly stating. I mean, he literally said in his tweet on X, it will be the easiest money you ever made. That is just, it's pushing his agenda. He obviously is, deeply invested in all of those assets himself. So it makes you a little bit cynical. And look, I like Kiyosaki. I've read several of his books. I like his books. They encourage people to, think outside the box with their investments and their personal finance. And hey, I mean, Denny, that's what you and I are all about, right? I mean, hence the name of the show, Bucks Outside the Box. But Kiyosaki, he has a long history of being a catastrophizer, of hyperbole and overstating, his points, and, pushing people into crypto and into precious metals. And, this is where I run into some trouble with Kiyosaki.
I mean, to be honest with you, Brian, I'm a little leery of Bitcoin. That's just me. I have friends that are like totally all in.
Crypto millionaires?
Well, yeah, more or less.
Maybe
I mean,
not
that's
the millionaire part, but they're,
well, no,
they're
not
bros.
no.
Yeah.
hoping. So I don't know.
Yeah, I mean, I have a little bit of play money in crypto, but it's money that I'm certainly prepared to lose, because at the end of the day, cryptocurrency is speculative, right? Like, there's no underlying intrinsic value to it because it doesn't generate revenue. Unlike, say, a company or a corporation that generates revenue, and you buy shares in its stock, right? Or real estate. What you and I do, we go in every month, do the co-investing club. We all sit around and we vet new passive real estate investments, and they generate revenue. So you can measure its intrinsic value of that investment based on the revenue that it generates. It's not speculative. It's an investment. Crypto and gold and silver are all speculative because they don't generate revenue. So, that's the real problem with all of this, the catastrophizing and, trying to shove that fear down everyone's throats to push them into speculative investments that are in many ways higher risk than stocks or real estate, the stuff that we invest in. So one final point here, the CFPs who I interviewed for this piece, they all disagreed that a, quote, greater depression is imminent. And by greater depression, what he means is something that is worse than the Great Depression of the 1930s. Talk about catastrophizing, right? So that Walters Kluwer Blue Chip Economic Indicator Survey of economists, they use something called the Misery Index to measure both. Yeah, I know, right? So it's a gauge of stagflation, actually, which is really relevant to right now, some of the risks that we are seeing in the economy. So the way they measure this Misery Index is it's a sum of the inflation rate and the unemployment rate. So high inflation, high unemployment, both bad, right? One being obviously inflation measure and a measure of the economy health, the labor market health. So the economists in this survey, they see that Misery Index climbing to a peak of 8.1% in the third quarter of 2025 before gradually easing back down to 6.9% by the fourth quarter of next year of 2026. So, one of the financial planners she was not a financial planner, she's an economist. She's the chief economist at Board, Michelle Green. She said that they are projecting slower growth over the next year and a half, but not a deep depression. So her direct quote is, "We have revised our real GDP forecast from 2.4% for 2025 down to 1.3% for this year, 2025. And that is in line with a lot of what economists are saying. That they're saying that all the tariff turmoil and all the chaos that are coming out of public policy in Washington, that is directly slowing GDP growth, but they are not foreseeing an actual recession, or at least not a deep recession, as being super likely. So yes, there is recession risk. It is entirely possible. We could be in one already, but no one out there other than Kiyosaki is shouting that the sky is falling and that we are we're about to enter a greater depression. So anyway, Denny, any final thoughts on that before we wrap up this episode?
It's just funny to me because, to be honest with you, my first book that I actually read that was a business kind of book is Rich Dad, Poor Dad. But the way I hear about him running and I don't know, I don't like creating panic because I think panic ends up hurting us all.
No
And
question.
yeah, so I don't know. It's interesting, but that's why I like real estate.
Well, you and me both, of course. And yeah, I mean, panic is not good for anybody. It's not good for sellers. It's not good for buyers. No one should be out there panic selling their stock portfolio or panic selling their properties, right? That's just going to make you, take a loss on your assets, and fuel someone else's gain to, scoop up. When people panic sell, guess who wins? It's the buyers who keep their heads, right? Even when everyone else is freaking out and panicking. So, one final thought here. Kiyosaki has been doing this for a long time. If you go back to 2002, he wrote a book called Rich Dad Prophecy: Why the Biggest Stock Market Crash in History is Still Coming and How You Can Prepare Yourself and Profit from It! So, I mean, he's been a bear for a long time, going back decades. He is just notoriously bearish. So take everything that he says with a grain of salt here with the catastrophizing, but there are very real risks in this economy. Way too much public and private debt, way too much government deficit spending, and there is higher inflation risk than usual. There is higher recession risk than usual. That's all true. Where we all disagree with Kiyosaki is we should all be panicking and putting everything we own into cryptocurrency and precious metals. So
Well, I grew up with a father who was very much into precious metals, silver specifically. But even as much as he was also a man who would never put all his eggs in one basket.
yeah, precious metals are a useful component of your portfolio as a hedge against geopolitical risk, war, for example, or skyrocketing inflation. That's all true. It should make up a relatively small portion of your portfolio. And go talk to your financial planner about that. Don't take my word for it. Go talk to a CFP about that or an investment advisor. But yes, there is a place in your portfolio for precious metals, potentially even for cryptocurrency. Like I said, I have a little bit of play money in it, again, for fun, for speculation. But again, a small amount, right? So anyway, Denny, final thoughts?
Well, I think, if you're looking for some stability, maybe, passively invest in real estate.
There you go. Yeah. So, and that's what, of course, we do every month. We run an investment club called the Co-Investing Club. We get together, we vet deals together, we go in on them with relatively small amounts per person, and we spread our money far and wide across, real estate syndication deals and secured private notes and private partnerships with active investors. And it's a lot of fun.
We don't put all our eggs in one basket.
Exactly. And we both have, deep stock portfolios as well. So yeah, we try to keep a balanced portfolio as we go about investing in stocks, real estate, and a little bit of precious metals and crypto too. So on that note, guys, check out sparkandall.com/free for a free course on how passive real estate investing works if you're new to the concept, and pass this episode on to someone else who maybe needs to be talked off the ledge and realize that this guy is not falling. So on that note, we will catch you next time. Stay weird, unconventional investor.